Is history repeating itself? A Labour government facing a surging budget deficit, inflation on the rise, and a crisis of confidence in the UK economy. Expecting higher interest rates, investors refused to buy more government bonds, precipitating a crisis. Sterling plunged, and the UK was heading toward a full-blown meltdown. Cap in hand, the Chancellor had to go to the IMF, asking for the then largest ever IMF bailout. The Economist declared the British government was bust. The Wall Street Journal ran a headline, "Goodbye Great Britain." That was the 28th of September 1976. But 49 years later, you may notice some disturbing parallels with today, except in some sense, things are worse now. Government debt is twice as high. The economy is not growing. The current account deficit is twice as big. Debt forecast to rise significantly because of an ageing population. Yet the 1976 crisis also had important differences that we'll look at. So what lessons, if any, can we learn from history? In the 1970s, the UK was falling behind its main competitors. Compared to, say, France, UK GDP had fallen 30% in recent decades. UK industry was losing competitiveness, not helped by record strikes, pay deals, and a complacent management of UK industry still stuck in the past. It led to a current account deficit, which in those days was front-page news. And the declining industrial fortunes led to a depreciation in the pound, causing higher import prices and inflation. But in those days, the value of the pound was jealously guarded. It was seen as a symbol of economic strength. But the problem was the economy just couldn't support the value of a pound, and the British government were using up foreign reserves to try to protect its value. But economic data kept getting worse. Bigger budget deficits, rising trade deficits, slowing economy. The UK economy was running out of reserves and were borrowing from central banks abroad. So the UK had to go to the IMF for a bailout, and this bailout was then mostly used to pay back foreign banks who lent the UK money. And the problem with any IMF bailout, of course, is that it always comes with conditions, higher interest rates and spending cuts. Unsurprisingly, it split the Labour cabinet, who didn't want to make cuts to the welfare state. But with a sense of there's no alternative, it was ultimately forced through. It was symbolic of the slow-motion car crash of the UK economy. Ironically, the seeds of the crisis could be traced back to the reckless Barber budget of 1972. In a mad dash for growth, the Conservative Chancellor kind of did a Liz Truss, massive tax cuts, except on an even larger scale. Growth soared to 10%, but so did inflation. And of course, the boom didn't last. The economy went into deep recession. But then, like kicking a man when he's on the floor, OPEC tripled oil prices in 1973, causing inflation to reach the highest level since the Napoleonic Wars. And inflation caused turmoil in the labour market, precipitating strikes, stoppages and industrial unrest. A young Mrs Thatcher couldn't help notice how the powerful coal mine unions effectively brought down the Heath government in 1974. But that's another story. The point is, by 1976, the UK economy was a mess. High inflation had damaged the economy and made it very difficult for the government to borrow. The pound was under pressure and the government were losing the battle. Now, one of the great ironies of the 1976 crisis was that it actually wasn't quite as bad as it looked on the surface. The IMF bailout had partly been premised on bad borrowing figures. The Treasury had predicted 10.5 billion. It actually turned out to be 20% lower at 8.5 billion. The Chancellor, Denis Healey, was later furious, saying, "An economist was a man who, when you ask him for a telephone number, gives you an estimate," a very costly, failed economic forecast. Also, 1976 was a turning point because North Sea oil was coming on tap. It led to higher economic growth, improved trade, and ironically a soaring pound. The bailout wasn't needed after all. Labour's Prime Minister James Callaghan would later say that oil was God's gift to the British economy. although some argue it was effectively squandered in the next decade. Again, that's another story. But for the Labour government, it all kind of came too late. The crisis cut through, cementing the idea that broken Britain needed a change of economic direction, and then the winter of discontent in 1979 sealed their fate. The comfortable post-war consensus of social democracy seemed broken, and there was a lady waiting in the wings to start an economic revolution. So in that sense, there are many differences with today. Firstly, the UK has abandoned all exchange rate targets. The pound sterling freely floats and has actually been quite stable since the Brexit devaluation of 2016. And for all the talk of economic crisis, the pound has moderately appreciated this year. Though, if you want to be pessimistic, you could say that's more a reflection of UK's much higher interest rates due to the persistence of UK inflation. A more pessimistic take is that in the 1970s, the UK economy was actually growing quite fast. Everyone thinks of the 70s as a broken decade. It was actually a time when real wages rose and GDP per capita grew, the kind of economic growth that seems unimaginable today. Also in the 1970s, there were no long-term demographic shocks coming down the line like we face today. In 1976, government debt was just 50% of GDP. Today it's double that. And not only that, but on current rates of spending and tax, we face a debt burden soaring in the coming decades to levels last seen in the Second World War. 1976 definitely highlighted the importance of inflation for creating economic volatility. Even with interest rates of 15%, bond investors didn't want to buy government bonds because with inflation so high, they kept expecting interest rates to go up even more. Many bondholders actually lost out in the 70s due to inflation being higher than expected. Today, inflation in the UK is still a problem. It's significantly higher than other main economies. But at the same time, inflation of 3.8% is just not comparable to those rates of 10 or 20%. One difference with the 1970s is that today the UK is not using any foreign currency reserves to bail out the currency. We're not borrowing from abroad to protect the sterling. However, the current account deficit is actually much bigger than in 1976. The deficit then was 1.5% of GDP. In 2025, it's more than double that, though it barely gets a mention in the news. Today, the UK's large current account deficit is being financed by capital flows. Think of US private equity firms buying up UK assets or foreign investors buying UK debt. In fact, one of the more concerning developments in the UK is that borrowing will be increasing significantly in the coming years. But with UK pension funds holding back, we will be increasingly reliant on foreign buyers of UK debt. And there's a big difference between borrowing domestically and borrowing from abroad, because when you rely on foreign investors to buy an increasing share of UK government debt, it does make the economy more vulnerable to concerns over sterling and UK inflation. However, at least for the time being, the shadow of an IMF bailout is not on the horizon. Market appetite for UK debt is surprisingly still quite strong, and there's also the Bank of England who could always restart a form of quantitative easing. And for all the problems facing the UK economy, and let's be honest, there are many, at least the pound is relatively stable, at least at the moment. So, although there will be no repeat of the 1976 crisis, it doesn't mean there couldn't be a different kind of crisis, especially a few years down the line. In 1976, certainly no one could envisage the changes which would come to the UK economy, not least the remorseless rise of big finance, which would have pretty big consequences in the coming decades. Well, thanks for watching. Interesting year. I was born just 2 months after the IMF bailout, November 1976, so a big change for the UK. But interesting to go back in time and see how it was much more different. And if you're interested in the 70s, do check out this video because it was really good, really interesting. I do like the 70s, very interesting time. Anyway, thanks for watching. See you soon.